Hello and welcome everybody to back to our education series week. We did have to postpone it from I think March 11th and 12th, maybe something like that, 12th and 13th to today. Had some unfortunate issues at home, family medical issues that we needed to postpone. So really thankful that you all are here today and ready to join in our session. So in the first two sessions, we talked a lot about several of our flagship chart lists. We had the strong earnings chart list that we went over, the raised guidance chart list, strong accumulation distribution chart list, and the bullish trifecta chart list. And those are four that I use pretty frequently in my trading. And of course, all of these chart lists are on the trading platform at stockcharts.com or more charting platform over at stockcharts.com. We do not require our members to have memberships at Stock Charts. It's helpful, but it's certainly not a necessary thing. It's really important, to understand that even if you have your own trading platform, you can actually have all of the symbols which are in each of our chart lists put into a CSV formatted Excel file that can be sent to you. You can upload those into your own platform. So just want to make sure that that's clear for everyone, that if you do decide to try out earnings beats, that you can be using a platform other than Stock Charts and still be able to get the full benefits. It just makes it a lot easier because, for instance, I annotate a lot of charts at Stock Charts, and those can be then downloaded directly into your Stock Charts account if you're already a member at Stock Charts at the extra level or above. So just wanted to kind of point that out, get that out of the way. Really appreciate, again, you all coming back and joining us here for this education series. It's really designed to show you a little bit about the earnings beats way, the way we approach the market, the watch lists that we use, how we get those watch lists, how we put them together, the numbering system in the chart lists and so forth, why they're numbered a certain way, and then which ones are annotated. Generally speaking, all of our chart lists are going to be vetted in terms of making sure that stocks are liquid. So we want to make sure that the average daily volume is at 200,000 or thereabouts or more, just to make sure that they are liquid for our members. And then normally we don't trade stocks under $5. So usually we have a threshold that these stocks need to be over $5. So I've got 5 chart lists I want to talk about with you today. So I'm going to talk about our strong future earnings chart list, our earnings AD chart list, which is earnings accumulation distribution. I'm going to go through and talk about the upcoming earnings chart list, also our short squeeze chart list, and our seasonality chart list. So these are all chart lists that we regularly do for our members. And the chart lists are just a way for us to put all of our research into organized chart lists that can then be downloadable into individual members' accounts at Stock Charts. But again, as I mentioned earlier, you don't have to be a Stock Charts member. You can still get all of the symbols in these chart lists in CSV format on Excel, and then you can upload those right into your own platform. So just keep all of that in mind. So I'm going to start off today talking about the strong future earnings chart list. And so just a couple points that I want to make on this. First of all, this was designed, the strong future earnings chart list was designed to capture companies that are still trading strong technically that are not in our strong earnings chart list. So if you were around for our prior presentation, then you know that strong earnings chart list includes companies that beat both top line and bottom line estimates in their most recent quarterly earnings report. So they cannot get on there without having beaten earnings estimates. This list is looking more at the technicals. So if the technicals are strong, they go on the strong future earnings chart list. And then what ends up happening is I weed out any companies that are on the strong future earnings chart list that are also on the strong earnings. They then later will get deleted from the strong future earnings chart list. So what it leaves us with are the two chart lists, strong earnings and strong future earnings, that have no similar stocks. There are no stocks that are the same in both chart lists. So if a company is really strong technically, but they beat top and bottom line earnings, they're going to be in the strong earnings chart list. But we didn't want to ignore companies that have really strong technicals and but for whatever reason either matched estimates or missed estimates in the most recent quarter, and they we call it the strong future earnings because anytime technicals are strong, it starts to make us feel like these companies are probably having a solid quarter. So these are companies that we may see some strong earnings coming out in their next earnings reports. But the key here is that they're technically sound. So what we do is I run two scans to come up with these stocks on the strong future earnings chart list. I run two scans at stock charts. One is the strong industry groups. So you'll see, and then this changes periodically, obviously, as industry groups go up and down. But generally, I'm looking for industry groups that are showing strength relative to the S&P 500. And so all of those industry groups are listed in this scan. And then you'll see there are a couple other criteria. Number one, the Scooter score, which is a stock charts technical rank, SCTR. That is a formula developed by John Murphy at Stock Charts. And in that formula, it's mostly based on the last 5 months of how a stock or an industry group, or excuse me, really a stock has traded over the course of the last 5 to 6 months. If it's showing a lot of strength or it's trading above its key moving averages and so forth, then it's generally going to get a high Scooter score, Stock Charts technical rank score. And so we want the best of the best. So the scores go from 0.1 to 99.9. So we won't consider a stock on the strong earnings chart list unless in this last scan, unless the Scooter was above 85. Sometimes I'll use 80. I might have used 75 in the past couple of times, but usually it's 80 or 85. So of all the strong of all the strong industry groups, any stocks within those industry groups that have a Scooter score above 85 get included, assuming that it also has a close above 5, and that its daily simple moving average of volume over a 50-day period is greater than 200,000 shares. So there's the liquidity part. We want to make sure the stocks are liquid. We want to make sure the stocks are over 5. We want to make sure the stocks have great relative strength. And then we want to see them in these strongest industry groups. This is where the lion's share of strong future earnings chart lists come from. Then what we'll do is we'll take another scan over at Stock Charts of the weakest industry groups, and here they are listed out, but Scooter score has to be at 95 on this. So we are talking about individual stocks that are kind of bucking the trend of their peer group, which is not particularly strong, but they still have a very, very strong Scooter score showing relative strength. And then again, it's got to be over $5, got to have that 50-day moving average volume over 200,000 shares. And so that's how we put this index together. And if you go in here, and the purpose of this chart list, by the way, here it is. This is the chart list right now, the one we have currently. If pull it up in edit form, it'll show you right now we have 152 companies on this list. And I'm going to go back and show you that in the summary form, because the way I like to use this is, let's say technically we see a breakout in internet stocks. Don't have to worry about that right now. But let's say internet stocks break out. then what I can do is come into this and you always say, well, if, an industry group's doing well or it's doing something where you want to get involved, but you can't buy the index. You can't buy that particular industry group index. How do I find stocks within that industry group? This is how. You go in here and you type in internet. And if it is set up in scooter order, which is this one I had already highlighted, the scooter column is the one I wanted to focus on. So you can see all of the internet companies that are on our strong future earnings chart list, which are solid, technical performers. And here's their current scooter score. All of them, the lowest on here is 84.3. And you can see quickly where, leadership, Spotify, still one of the strongest companies within the internet space. 21 Vianet Group, same thing. KE Holdings, DoorDash, Genius Sports. This one actually had the best day of all of these today. If you look at Genius, you can just quickly zero in. Market's been horrible, but there are still stocks out there that are doing well. Here's one, Genius Sports Limited. And look at the volume coming in March. Look at this volume, so strong on this move back up. Off of the uptrend, we were kind of going sideways, consolidating, and now we have potential breakout. Now, stocks on the strong future earnings chart list are not annotated. So don't do anything to the charts. We just provide the stocks. And then you can kind of take a look. Now, I usually like to look at the AD line, and you can see during March, we've really seen a pickup in the accumulation distribution line of Genius, GENI. So, if we get a breakout, we've been struggling to get through about 10 and a quarter, 10.30. If we can get through that level on a breakout with increasing volume and a strong or strengthening AD line, this is a potential breakout candidate that you certainly could consider trading. And so we could go through and, do this with, any industry group that you wanted. You can, pull up software. Here's the software group. All of the stocks on the strong future earnings. And this box right here where you can search, you can do this on any of the chart lists. So I'm just featuring right now the strong future earnings, but this could be used on the strong earnings. It could be used on the raised guidance. I mean, again, you can go through and check out any of these. The other way that you can kind of scan for stocks is I could go in, for instance, let me go to the dashboard and I'll show you real quick. If I go down to scan and I set up new scan, I'll just get rid of the criteria. I don't need a volume criteria, by the way, because I've already done that in all of my individual chart lists. And right now what I'm going to do is I want to look at what's in all of the various chart lists using a particular industry group. So let me show you how this would work. So let's say software is the group. You can go in here under sectors and industries, go down to technology, pull up software, add it. So now what it's going to do, if I just ran this scan, it's going to give me every software company out there. Well, I don't want every software company out there. I want every software company out there that's in one of our chart lists. So, or maybe certain chart lists. So I'll just kind of show you here what I would think about doing. If software was a group all of a sudden I'm interested in, I could go in and say, okay, let's take a look at the strong earnings. We'll add that. Another chart list that we might be interested in is raised guidance. We'll add that. Maybe, strong future earnings. That would be another one. We certainly could add that. And then maybe, let's do the strong AD. So we add that. So let's just say these are the 4 chart lists that I wanted to run to see what software stocks are included in these groups. Now, some of these groups, like a strong AD, doesn't matter what the scooter score is. Generally, I mean, I do filter with the scooter score, but strong AD is mostly focused on the AD. Raised guidance is going to be focused on simply whether or not a company has raised guidance and if the chart looks decent or we have key support levels that we can, monitor, that sort of thing. It really doesn't matter about the scooter. So we could put a limit on it here if we want. We could say, okay, the scooter has to be above a certain So let me go in here and do that. We'll just say Scooter's got to be at least 75. So we're going to add the Scooter. There it is. So we're going to say Scooter's got to be at least 75. And now, right now, the way this is set up is it's saying it's going to look for all software stocks that are in all of these chart lists, because it's saying and the chart list, strong earnings and raised guidance. So what you have to do is you have to put in another bracket in here. And then it's or, put in all the or clauses for the chart lists. And then put another bracket in here at the end. And so now what it's saying is, okay, find me all the software stocks that are in any of these chart lists, this chart list or this chart list or this one or this one. So now it can be in any of them. And with a Scooter score over 75, now I'll run the scan. So now all of a sudden, I've just narrowed the playing field to 40 companies that are on our researched chart lists and in the specific industry group that I'm looking for. Now, it's not going to tell me which chart list they were in. If I want to know that, I'd have to go in to each individual chart list and pull them up the way I showed with that search box. But this is just another way to go in and cover all the whichever chart list you want at the same time on stock charts. And if you have all of our information already downloaded, you can scan against chart lists. You don't have to scan against the entire population of stocks and ETFs and everything else that's out there. So it's just a way to be able to look at these stocks much quicker. Then I could sort this in Scooter order if I want. I can save this into a software chart list. I could just call it software stocks or software watch list or something like that, if I want to save it. Or I can just kind of look at it and say, okay, let me look at all these stocks that are maybe over 95 on the Scooter. And this is going to be a pretty good list of software stocks. That doesn't mean that they're all going up right now. Again, it's based on a formula, and it's based on an asset class. So like Palantir, which is a large cap stock, it's comparing Palantir to all large cap stocks. Not all software stocks, not all large cap software stocks, but all large cap stocks in all industry groups. To be ranked at 99.6 still indicates that Palantir has made a really big run to the upside over these last 5 or 6 months, even despite some of the selling we've seen recently. Anyhow, so that give you a little bit more idea. And I'm spending a little bit more time on the strong future earnings chart list than I will the others, just because I think it's a chart list that's going to provide potentially a lot of trading candidates. And it's something that I would tend to use more frequently than some of the other chart lists. So I really wanted to point this one out. One thing, a lot of our chart lists have, numbering systems. This one doesn't. So if we go back over here, you can see all of the stocks are just going to be generally in alphabetical order. I run scans and I drop them in to the chart list. And then I go through and I pull out all those stocks that are the same between the strong earnings chart list and the strong future earnings chart list, because they're already on strong earnings. I don't duplicate them here. So again, that's kind of the strong future earnings chart list in a nutshell. The second one I wanted to talk to you about a little bit is the earnings AD chart list, earnings accumulation distribution. So this one I just updated, and historically what I've done with the earnings AD chart list is that a stock has to have gone up intraday from open to close the day after earnings at least 4%. So company reports earnings on a Tuesday night. The very next day, Wednesday, it opens at 10. If it doesn't close at least 10:40, which would be a 4% increase, it is excluded from this particular chart list. At a minimum, it has to go up 4%. Now, what I've got here is, and what I've done is I've actually included, I don't know how this one AHCO snuck in here, but what I decided to include in this latest chart list, because we've seen so many of the stocks going down because of the correction that we're in currently in the market, that a lot of these, a lot of the stocks that only had 4, 5, 6%, 8% moves from open to close have already gone back and lost their gap support. So essentially what I did in here was I wanted to pull up stocks that have gone up at least 10%. In this case, 9.69. One of these, like I said, snuck in here. So you can see Meridian Link, 10.21%, HURN, 10.38%. So you can see the numbering system is already different in this, because what I'm including in here is that percentage so that you know how it ranks relative to the others. So if you're interested in the ones that, opened and just exploded to the upside, just hit this name order and it'll flip them for you. So now the biggest one in earnings season was ACHR, Archer Aviation. It went up from opening bell to closing bell. The first day after its earnings were reported, open to close went up 31.75%. That, I would say, is a lot of accumulation. Now, one of the things that we did with this chart list, the earnings AD chart list, is we have annotated them. So I'm showing you where the gap support is. So for instance, on ACHR, you can see that there is a line that comes across. This is the earnings day. So the stock had closed at about $7.90, something around there, before earnings came out. Earnings came out and the stock gapped down and opened, it looks like somewhere around 675. And that day closed all the way up near 9. So that difference from 6.75 to almost 9, that's your 31.75% that is included right there in the name of the chart. So you can quickly see which ones, are great. Now, here's the interesting part about a stock like this, and the reason that we do the earnings AD chart list to begin with. Here's a stock that opened, like I said, at about 675, ran all the way up to the very next day, got as high as 950, 940, something like that. And look at what happened over the course of the next 6, 7, 8 trading days. We came all the way back down to hit where all the buying began, which was at that 675 level. So when you've got, and you look at the volume on this particular day, over 55 million shares that day. That's a really heavy volume day. It's one of the heavier volume days. So this is telling us that there was a lot of buying that began at about 675. So we put this on here so that if a stock were to come back down to this particular support level, it's not guaranteeing that it's going to bounce, but what it does do is it minimizes the risk of entry. And earnings beats, that's really what we're all about. We try to manage risk as best we can, because you're not going to get all your trades right. So when you're wrong, good friend of mine used to always say, you don't want to be wrong for long. And so if you get it right at support and it goes through support, you get out quickly. In this case, it held support. Stock was at 7 or 6, probably down around 670. And right now it's back up at 828. So that's $1.50. This stock's gone up probably close to 25% in 7 days since hitting the support level. So that's the whole idea, is we're trying to provide in this particular chart list support levels so that you can see exactly what's taking place. So let me go ahead and I'm going to keep going down. Now, here's one. I want to give you one that's getting close to a key level right now. HSAI. So the stock opened around 18.5 and went all the way up to 24, which was a 30.16 percentage point rise from open to close after earnings. And if you look at where we are right now, the stock, after getting up to 24, has come all the way back down. We're sitting at 19.25, which isn't too far from that 18.5 area. So we're getting really close. We're testing the 20-day moving average, kind of coming back down into this price, what used to be price resistance. now a price support area. Instead of chasing the stock at $24, you have patience, you wait, and hopefully get it closer to support. And again, that way, if support holds, you're going to look like a genius, going to make some pretty good money. And if the support fails, you get out, hopefully without too much damage. If you get in at 24, the problem is, where do you get out? Do you wait on it to go below the 20-day? Do you wait on it to go below gap support? Because at that point, you're already down almost 25% on the stock, which is too much. So again, here, this is the earnings AD chart list. And on here right now, we have, I think, 34 charts. But these are going to be from the last quarter's earnings reports. These are going to be the 34 best reactions to earnings in terms of the movement from open to close. So if it gaps up 30%, it's not included here because we want to see that accumulation. You can't accumulate with a gap up. If a stock was at 18 and it opens the next day at 24, you can't buy it. There's no way if you're buying at 24. You're not buying at 18, 19, 20, 21 on the way up. So this, to me, shows much more in the way of accumulation. So we put that out there for our members in this separate chart list. One of the keys also with the earnings AD chart list is that it doesn't matter whether earnings beat or missed or matched. Doesn't matter. Strong earnings chart list, we had to have those criteria. This is only looking at the technical price action the day after earnings. That's the only criteria that gets you on this chart list. And this one is only updated maybe once a quarter. I usually wait until just about all the earnings are out, and then we go through and we put these in, show the annotations where price support. Some of them may have already gone up, come down, hit support, and back up again. But others, like the one I just showed you, I think it was HSAI. Some of them, we might see over the next couple of weeks. We may see them come down to a key support level and then turn back to the upside. And then the only other thing that maybe I would consider is the volume. I want to make sure that the volume is pretty strong because we're looking for that demand. We're looking for accumulation. If they come out, they have goes up 15% from open to close, but it's less than average volume. Where's the accumulation? I mean, if it's a slow day volume wise, that's not accumulation in my book. So we want to see that. All right, next up, upcoming earnings. Now, I didn't have the foresight. I've already deleted all of our upcoming earnings, but what I will do is I can just show you, for instance, I'll go to Zacks.com and we'll go back into the middle of when earnings season was really busy. So we're going to take a look at the earnings calendar and we're going to go back several weeks because probably you can kind of see the earnings here on top. A number of earnings reports. So we're going to keep going back until we get some really big ones. Well, here was 159. Let's see. 201. Let's just pull up the earnings for February the 6th. And, I've just put it into market cap order. So you can see there are some pretty big companies that were reporting that day. Amazon was reporting, Eli Lilly, Philip Morris, AstraZeneca, Honeywell, and on and on and on down the line. Fortinet, software company, Hilton, hotel, Cloudflare, which is Net, another software company. All of these different companies reported that particular day. Now, when we put upcoming earnings chart lists together, what we do is we'll take the after the market close on February 6th and then the before the market opens on February 7th. and we'll put those all into one chart list. Now, why would we do that? Well, when you get a chart list, and let's just, let me pull up a chart list here. Don't know why it's not doing that, but anyway, so if we pull up a chart list, just for a minute, just imagine, because again, I don't have these upcoming earnings. I've already deleted them because we're not showing those anymore for the next month. But just assume that the strong earnings chart list, that this was just showing all of the companies that will be reporting on those 2 days. Now, the beauty of it is the next day when the market opens, we're going to have every company that reported earnings the night before and that morning are going to be on one chart list. So we could pull up the chart list, view all, hit that summary, and it'll show us on earning the day after earnings have been reported. It'll give us all of the action, and we can sort it by percentage change to come up with these companies and whether or not they had big market reaction to the upside, or we go to the other one, see, okay, these are the ones that would have the big market reaction to the downside. So it just gives you a really quick snapshot of, and when earnings season is strong, we could have up to a couple hundred, 300 companies on one chart list, which would mean, if you wanted to just look at each company individually, you'd have to go through and pull up every single individual chart to see the market reaction. Here, we've already done all that work for you. We've put all of those companies into a chart list. You can then bring the chart list up in summary view, and you can quickly find whatever it is you want to find. I mean, if you're saying, okay, give me all the semiconductor stocks that reported earnings, and here you go, semiconductor. Now, again, this is a strong earnings chart list, so we got to use our imagination that these are companies that were going to report earnings the night before or the morning of this particular day. But we put those upcoming earnings chart lists out there every single day during earnings season. So it saves our members a ton of time to be able to go through and look. And then trying to think one of the key filters is that the company has to have at least a $1 billion market cap to be included on the strong earnings chart list, or excuse me, to be on the upcoming earnings chart list. And then what we also will do is, and I do still have this one, I believe, the upcoming earnings relative strength chart list, which will then highlight all of the companies for the entire week relative to their peer groups. So these were all companies that were reporting from March 10th to March 14th. So what I could do is say, okay, give me, the best performers over the last week, and on a relative basis, how these stocks have performed relative to their peer group. And RBRK in the computer services space has gone up 29% relative to its peers in the last week. So you pull the chart up. All right, I don't know why it keeps doing this. Let's try again. There we go. So you can see over the course of the last week, the stock's made a big move. And if you wanted to look at its actual chart, you just type in RBRK. And you can see over the course of last week, we had a big gap up with earnings. And so this has been a pretty nice performer coming out of its earnings. So it's been the strongest stock in that chart list. The next one, IHS. So IHS, I could pull it up with this relative chart. I wanted to pull up individual, and then on the relative chart, and you can see the stock gapped up. And you can see some of the stocks on here will be below $5. Here's a perfect example of one. I don't filter these for volume. Well, I shouldn't say this is something actually that Matt Townsend does. These upcoming earnings chart lists and the upcoming earnings relative strength chart list. And so they're not already filtered for price. They're not filtered for volume. So you can see this one, going back a couple weeks has traded less than a couple 100,000 shares, even though the average is probably over that. But if you go through all of the stocks, you'd find some that were not heavily traded. So you do have to still kind of monitor that yourself. But I think the information here to be able to put together all of the stocks that have reported all in one place, I think really helps if you like to trade earnings, which I do. Trading earnings and gaps is probably one of my favorite trading strategies, if not the favorite trading strategy. All right, so that's the upcoming earnings and the upcoming earnings relative strength. So I got two more I'm going to go over with you. First one is the short squeeze chart list. So get a question like this every once in a while. Folks are like, well, do you do anything with, short squeezes? Do you, trade short squeezes? Well, we have a chart list for short squeezes. And we get this information, and there are a lot of different sources out there to get information on stocks that are heavily shorted. But what we do and the way we number our system, we update this chart list, first of all, usually twice a week, or every 2 weeks, I should say. And it's in order of the short percentage of float. So if a stock's got 100 million shares in its float, meaning that those are readily tradable shares. They're out there in the population. Anybody can, those shares are available to be traded. If there's 100 million, and this says 53% are, that's the short percentage of float. Basically, the outstanding shares or the shares available for trade is the float. So 53% of 100 million shares is 53 million shares. So that's a lot of additional shares that have been borrowed from people's accounts in their brokerage accounts. And those 53%, that 53 million shares has been borrowed and then sold again. So at some point, those shares that have been sold have to be covered or bought. Now, a lot of these companies are shorted for a reason. So just because they're heavily shorted doesn't mean you just go out and you back up the truck and start buying these stocks. Many of them, as you will see as I go through some of these, are stocks that just keep going down and down and down. A short squeeze doesn't happen. You don't get a short squeeze just because the stock goes up for a day or two. You get a short squeeze when a lot of shorts are underwater and the volume is picking up and the losses are starting to mount for short sellers because they have unlimited risk. Thing is, when you buy a stock, if you buy a $10 stock and put $10,000 into it, what's the most you can lose? $10,000. It's if it goes to zero. If you short a stock that's selling at $10 and you short 1,000 shares, how much can you lose? You got to buy it back at some point. Well, the buy point to the upside, in theory, is unlimited. It could go to 20, go to 50, go to 200. We don't know. So what's your potential loss? You've sold for 10,000, but where are you going to buy? You don't know. You could sell for $10,000 and that stock goes from 10 to 200. And now you're looking, when you go to buy, you have to buy and pay 200,000. What if it goes to 500? You have to pay 500,000. Your losses are unlimited. And so that's when things start to get kind of crazy, is when these stocks break out and the volume picks up, because then it puts fear into folks that are on the short side. They're like, how much pain can I take? And then when the short squeeze starts going, remember, not only are technical traders buying because the stock's moving up and there's heavy volume, probably showing up on a lot of scans. So you got buyers there, but then you've got these guaranteed buyers that have to buy at some point. 53% of the float, if this stock were to start taking off, all of a sudden it's going to be like, being in a crowded movie theater and somebody yells fire. Everybody's going to try and file out of that one door at the bottom and people are going to be getting trampled. That's kind of what a short squeeze is. Everybody's trying to get out at the same time. And that's what sends the stock soaring. But let's look at this chart and see if it technically is a stock that we would want to short, or excuse me, want to buy because of a squeeze. Well, here, look at the volume. Now, here's one of the differences with our short squeeze chart list. Very top, we have volume, and we separate it, showing the average volume line. That's this blue line. If you can't see where it is, you can come up here and it'll tell you what the 50-day moving average is. Now, when you get a short squeeze, it's usually a very, very rapid ascent, and the volume is unmistakable, way above average volume. If it's slightly, if you're looking at a stock and it goes up like this, has one day where the volume goes a little bit above the volume or goes above the average volume, that's not a short squeeze. You need to see it continuing for a period of time. This is where folks are starting to panic. Anybody, when we get up to, $5, $6, anybody in here who shorted at $5 or $6 or lower is starting to see some losses mount pretty quickly. The other thing is, many of these stocks, like I said, are shorted for good reason. So, when they break out, I don't have a magic formula on how far they're going to go to the upside. You just have to come up with something. Maybe it's a trailing stop. Maybe, as long as the stock keeps going up, printing a higher low every day, you stay in it. And then maybe it goes down, prints a lower low, and that automatically takes you out. So every day you're raising the stop. That's possible. You got to do something to be disciplined, because once the run is over, the short squeeze is over. Look at what's happened to the stock. It's going right back down to this downtrend. It may go all the way back down below this recent low. And look at the volume. Now we're back way below average volume again. Next one is 002, Beyond Meat, 43%. Short percentage of float. And you can see, look at this. This one got that one breakout, one big day, and then it turned around, reversed, and went straight back down. This is one that probably would have cost me money if I'd played that, because the volume did go up about double. Looks like we're breaking out above some key recent highs. That to me looked like, hey, we could really make a run to the upside. And we did briefly for the next day, and then we turned right back around. So that's probably one that would have triggered some losses. I might not have, I might have looked at that and said, yeah, volumes is increasing, but it's still not crazy high. And so what you would do is just go through all of these lists. You can see, look at that. Here we got the volume picked up, but look at the volume as we keep going higher. Is this a short squeeze? I would say no. We're going higher, but I don't think it's a short squeeze. We're not forcing a bunch of people to cover, or the volume would be up way above average. And then you could just go through the list and just find a stock maybe that's setting up. I'm just going to keep going through here, show you how it kind of works. All right, this is one. Look at the volume here on OPK. So we had a lot of overhead resistance at about $1.70. And then as we went up a little bit above $1.70, volume got up to average, but that was about it. We made this one move right here above 170, and look at that volume take off. Average volume looks like it's about maybe 3 million at the time. Now it's up to about 5 million. But we went, traded close to 20 million versus average volume of 3. Then the next day, 30 million. The next day, 50 million. Do you see? And this stock went from 170 up to 210, 40 cents, probably went up about 25% after making that breakout. But now volume's back down and we're in a trading range. I would be careful with this stock. I think 170 to about 195 is the trading range. If we break out again, watch the volume. That would alert you to, hey, this is another potential short squeeze. And so you would just go, look at this one, Groupon right here where it makes the breakout above all these tops. Now the volume's come back down, still above average, but it's come back down some. But when you break out above 14, anybody that shorted Groupon in the last 7 months is losing money right now. So that's when it starts to get a little hairy for short sellers, is when you get a breakout. And most of them, we're almost up to the 52-week high. If we get above 18, I would certainly expect that you're going to see this volume pick up quite a bit. Anyhow, this goes all the way down. We numbered this. There's 63 stocks on here right now currently, and we limit. In other words, you got to be above 20%. The float, the short percentage of float has to be at least 20% to make our list. And again, we've got a little different setup on our chart because volume is so important. I put it right up there on top. Because with a short squeeze, you've got to make sure that volume is exploding or you don't have a short squeeze. All right. The last chart list I want to talk to you about is seasonality. So every month, what we do, I've got an Excel spreadsheet that I use. It's got a lot of seasonal data on the S&P 500, the NASDAQ 100. Doing a little bit more work right now on getting that information for mid cap, small cap index, and so forth. And so what we do is at the beginning of each month, we send out to members our seasonality chart list. So for March, of course, hasn't been a very good March, but here are the stocks that historically have done well in March. So we start off and look at this numbering system. First of all, there are going to be 20 stocks on this chart list that we send to members, 001 through 020. So here they are. They're all laid out every month, same format. Stock, the number, which is the highest average monthly gain for each stock. That's this 7.4% number on Lulu right here. And then 65% is how often Lulu goes up during the month of March. 65% of Marches over the last 20 years. So let me show you how we would do this. So I'll just show you Lulu on here. Seasonality. And then what we do is we go back 20 years, in this case, 19 years. But remember right now, this includes March of 2025. See right here? So percentage of months in which Lulu closed higher than it opened from 2007 to 2025, but it includes this year. Remember, in a perfect world, I try to get this out the beginning of March. So there's going to be no March activity yet in 2025. So I drag this back 1 year, and now you can see 7.4% for Lulu right here. And 65% of the time it goes higher in March. So, in this case also, April usually follows it up. So normally March, April is a great time for Lulu. But does that guarantee his prices are going up? No. And in fact, so far this month, you can see we've come down quite a bit. Now, all 20 stocks, we do go in and put some key price support levels, annotations, so that members can look at this. And maybe if this, Lulu is a really good stock for the month of March, and it happens to get down near a key support level, the fact that you're in a solid month would add maybe some confidence that it's going to bounce off that support level, because it does tend to like the month. March doesn't guarantee, but again, it's another signal. It's just more knowledge, more technical, in this case, historical support for owning a company. And so Lulu, it marked a couple of areas of support, one around 330, the other just below 300. We got down to about 303, 304 before we reversed back up near 325, 330. So anyway, that's number one. Number two would be Arista Networks, which is 6.2%. That's the average March return. 80%. So let's look at ANET. I don't think this one has 20 years under its belt either. No, this one only has 12. And so if we back out 2025, there's your 80% going up in March, and here's 6.2% average March. And in the chart, you can see already we've gone down from 92.50, excuse me, down to about 76 before bouncing back up to around 85. So where are we going to be, in another, week, or where are we at? March 20th, another 10 days. Are we going to get back up? Is it going to be a positive month for Arista Networks, or is this going to be one of those marches, 20% of marches, which have been down? Overall market obviously has an impact on these stocks. If the market's going up, I think we have a much better chance. If the market's going down, chances are we're, probably these stocks probably are not going to perform historically the way they normally would. Again, if you're in a really weak market, that just kind of makes common sense to me. The other thing I want to mention about the naming of these is that also there's this date over here you see, 5/6, May 6th, AMC. That's the date of the next earnings report. So I just want to let folks know this is a March seasonality list, but some of these stocks, I'm going to go ahead and set this up in summary form, but some of these stocks, if you look, are, they do have earnings coming up in March. Lululemon today after the bell. So we could pull this stock up. Actually, we could look at it right now. It should have come out with its earnings. Today is the 20th, right? Unless they switched, because sometimes they did. They actually moved earnings. Next earnings date's March 27th. So it's next week. I don't go back and change all of the dates in the, let me go back to that. I don't go back and change these dates. Once I put them in there at the beginning of the month, if it changes, it changes. If you own a stock or thinking about owning a stock, you should always be in the habit of checking earnings dates. Anyway, 1 to 20, they're listed. And so you kind of get a sense of, which stocks tend to do well in March, and kind of go from there. But again, they're all annotated charts. So I can pull up Monolithic Power here, MPWR, and there was a key support that was found back in November. And early March, we went right down and tested it before bouncing. So this is one of those that, did provide an opportunity because it was down in the month of March, but it was testing a support level, but it's a good stock historically in the month of March. And off of that support at 560, the stock went all the way up to over 650. That's 90 points. That's over 15% since the recent low. And that's just over a course of less than 2 weeks. So there are multiple ways to trade. But again, all of these chart lists we do for a reason. To provide the best possible knowledge and opportunities for our members that, we can find. If you're going to make mistakes, you're going to lose money. I'd rather at least be knowledgeable about it before I start throwing my money out there. And again, I think these chart lists, the 5 that I just went over with you today, along with the 4 that we went over previously in our free education week earlier this month, provide you, in my opinion, a much better opportunity to, have trading success and outperform the S&P 500. That's the whole idea. Anyhow, that is it for me. I don't know if we have any questions, but I don't know, Tyler, if you want, or I guess I could go back and look at them.
There are a few questions in there. I don't mind reading them out.
Okay, what do you got?
So we got one that says, is the scooter score shown on the Excel sheet when you download it if you don't have stock charts?
No, it's not. It's literally just going to be a CSV file with all the ticker symbols.
All right. Got another question. Just says, hi, Tom. I have not received the DMR and EV Digest today. I checked all my folders, but didn't find anything. Did you have them sent out? Thanks.
Yeah, EV Digest doesn't go out on Thursday. So we had it. That was yesterday. Normally it's Monday and Wednesday. So that's why you didn't get an EV Digest today. As far as the daily market report, it went out at 3:50 Eastern. Went out 10 minutes before the close. And always keep in mind, I'm trying to think if I posted that one. I may not have posted that one to the blog today. So if you went on our website to look, you may not have seen it, but it should have been it definitely should have been in your mail. Well, I'd have to look on this computer to check my mail, but yeah, unless, I haven't heard anything from anyone else at Earnings Beats about mail, folks writing in, not getting it. So I'm assuming you've got it. I just don't know why it wouldn't be in your normal folder.
Okay. Got another one that says, can we get the scans that Tom is showing in the video?
Well, the scans that I showed, first of all, I just made the one up about the various chart lists. And I think I had a scooter over a certain level or whatever. So that one is not even one that I keep. I was just kind of showing you how you could use that scan. The one scan that I showed for the strong future earnings chart list changes all the time. So I have to change the strong industry groups. If an industry group starts to weaken and it goes into the weak industry group scan, then it comes off of the strong and goes into the weak, and vice versa. So some that are weak may start to strengthen, and they flip-flop. So, I mean, providing that chart list, it would get outdated pretty quickly. Or not the chart list, but the scan. That particular scan would get outdated pretty quickly, which is why we don't include it as one of our regular scans on our website. So I don't know that one's going to do you any good, because you have to manually make the changes on there with all of those industry groups.
All right. We got someone saying that the upcoming earnings relative strength chart list isn't available for download.
Yeah, I'm not sure why. We'd have to take a look at that. Maybe send Aaron a message, Tyler, if you could, and just say, because I'm pretty sure it's on the website. I don't know why it wouldn't be downloadable. I know why the individual days upcoming earnings aren't downloadable, because I've deleted them. So there are no chart lists at this point that can be downloaded from my account. So that's I actually went in and tried to do it from the website. So I had an upcoming earnings chart list, and then I'm like, well, duh, if I deleted them, there isn't one. So unfortunately, those are gone. But I think the relative strength chart list you should be able to download. I've kept mine. I didn't delete that one from my account, so I would think you could download it. But maybe we can check in with Aaron on that one. Write in, just write to support, Robert, and just let her, just reach out and just ask for that and why it can't be downloaded or something like that, and someone will get back to you.
All right, just two more questions. One is, can you speak about the last chart on the website, the upcoming relative strength chart list? And someone just is asking for a market update, if you could.
Yeah, as far as the upcoming relative strength chart list, that's what we were just talking about there. So if you have a question and you're unable to, you were looking at the last chart, not downloading it. Speak about the last chart on the website. I think that is supposed to be chart list, which we did talk about.
Okay.
So I would just write into support with that question. As far as the overall market goes, I wrote, it's still kind of early after the Fed meeting. I don't think that, we've necessarily seen all we need to see just yet. I'm not overly excited by the way the market's performing, though, since that came out. The overall market, I think it was in, let me see if I can get you this chart list or this chart. This is one that I had in the daily market report today. It's this one. Let me just make it a little bit bigger so that you can, and I'll just finish with this. So I've got this black dotted line that shows 2:00 on Wednesday, which is when the Fed announced their latest policy statement. And so what I did is here's the S&P 500. So since that came out, we were somewhere just below 5640 on the S&P 500. Now it's been over 24 hours and we're at 5660. So, we've gone up 25 points on the S&P 500, which is less than 1% down. It's probably about 0.4%, 0.4%. And what I'm trying to look at is underneath the surface. In other words, if the S&P is flat, but we're seeing money rotate back from defense to offense, that's a pretty good thing. But when I was looking, I see some good movement. I see some not so good movement. And so I'm not excited about the reaction so far. I think any of the positives that I could take away from this probably is offset by the fact it's options expiration week. So any kind of movement to the upside in some of these areas may just simply be due to options expiration. So it's really difficult to be overly, bullish right now. In fact, I'm not bullish at all. I'm pretty nervous about the market. I still think we have room for a potential bounce, but I would watch those 20-day EMAs on your charts. I think, if we get up there, there's another chart. Well, let me go through this one. I'll show you the other S&P 500 chart. But here you can see QQQ versus the S&P. So you're getting a little bit more growth in the QQQ versus the S&P. And so, but this has been down since 2:00 yesterday, slightly lower. So growth isn't seeing any kind of major, rotation. Then I looked at discretionary versus staples. That's a little bit to the upside, but think about how far we went down. I mean, this little bit of a rally here for the last 24 hours plus is nothing compared to what we lost. So I would have liked to have seen this go straight up. I mean, you can see our initial move was to the upside yesterday afternoon and then this morning. But then we moved in the afternoon and once again started seeing deterioration during the day in these two areas. Don't think that's good. Then we got the IWF versus the IWD. That's Russell 1000 growth versus Russell 1000 value. So it's large cap growth versus large cap value. Look at it. We're almost unchanged from where we were when the Fed announced. How about another look at large cap growth, large cap value, just using the Dow indexes instead of the IWF and IWD? And basically the same. I mean, sideways, no improvement, zero. This is what I want. I wanted to see improvement in these areas, and we're just not seeing it. Mid cap growth versus mid cap value up a little bit. Small cap growth versus small cap value down a little bit. The dollar's been a little bit all over the place. It went down yesterday afternoon, gapped up today, but then was basically going down all day again. So the dollar is still not performing well, in my opinion. Technology. Look at technology relative to the S&P 500. This is 30% of your S&P 500, this sector, and it's underperforming. So that doesn't bode well for the S&P 500. Technology, for the S&P to really have a meaningful push to the upside, I think technology's got to play a part. And right now it's still not. Discretionary versus the S&P 500. Yeah, we did see a pretty big move yesterday afternoon and again this morning, but then we started giving it all back again. So we're still up from where we were at 2:00 yesterday, but there was more deterioration again most of today, most of the trading day. Even when we were trying to rally at times, we still were not really rallying in discretionary relative to the S&P. So my update is this. I just don't see much improvement to what I've been talking about. So yeah, we got options expiring. Maybe we still have a run because of that here over the course of the next, 1 to 3 days. But beyond that, if we don't get a run, or even if we do get a run, I would expect another down leg coming. I mean, I hate to say it. We're getting ready to go into April. Next quarter's earnings, you would think we're ready to run, but there's been a lot of damage done technically, to our charts. Mag 7, we talk about technology, but it's also the Mag 7, which many of those stocks are also outside of technology. And Mag 7 stocks just are not looking good. I am looking at some manipulation data. Actually, my son Tyler did a really good job getting me some information on the intraday trading of the Mag 7 stocks, along with a few other stocks. And I do see some positives in a couple of those stocks. One, namely, is Microsoft. Microsoft, its entire weakness has been almost 100% based on gap downs and trading down in the first 30 minutes. After you get past 10 or 11 o'clock, Microsoft has actually performed really well. And I think like 9 of the last 10 days, if you bought Microsoft at 2 o'clock in the afternoon, you made money going into the close. Now, that was not the case today, but many of the, maybe it was 9 out of 10 days prior to today. It might even been prior to yesterday now I think about it. So we'll update that. But Microsoft to me is one stock that is showing some, I'll pull it up. To me, it's showing a little bit of manipulation. So you're getting a lot of gap downs and then recoveries. You had a few of these big red candles back in February, but we've had a lot of hollow candles in the first 3 months of the year, which tells me that, the action probably is not nearly as bad as what's happening in price. And look at the AD line, which is also, a great indicator of what's going on in terms of accumulation distribution. Microsoft's about ready to break to an all-time high in its AD line. Stock's gone down from 455 to 377, and all the while, the AD line has essentially just, we went down, now we're right back up to where we were. So I think Microsoft's showing some really good signs. This would be a stock that probably is something that, maybe we could start accumulating. I mean, I think if the market goes down, it keeps going down, but it's probably going to be the gap downs. Also with an AD line looking like that, really strong, sometimes these morning lows are great opportunities to get into Microsoft. So let's see here. Morning, you can see the buying all day, March 14th. That was last Friday. Monday, we gapped down. We came back down here late morning, put in kind of a double bottom that day, and then look at the rally. Here, we didn't put it low in until 1 o'clock, and then we rallied. Here, we put in the low first thing in the morning, and we were much higher by the end of the day. Here, with the low was in the very first thing in the morning as well. And we did come down throughout the day today, but started to strengthen again the final couple hours. So even today, Microsoft, from 2 o'clock on would have made money. From here, 2 o'clock on, made money. 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 That's 5 for 5 last 5 days. So again, late afternoon buying is a good sign. And so I think Microsoft's starting to show some good signs, but we're going to need a reversal in the market. I don't think Microsoft's just going to turn around and go back to a high without the market doing better. So this is one, and I'm going to have more information out about these stocks, these Mag 7 stocks and a couple others, probably over the course of the next few days to a week or so. Just continuing to monitor some of the manipulation that's taking place. I'll tell you what, the worst stock of the ones that I've looked at so far was Tesla. So Tesla has been getting beaten up throughout the entire trading day. It's not just gap downs. It's not just morning. Tesla has been getting thrashed. I mean, when you lose 50% of your market cap and you're seeing selling throughout the day for the most part, that is not a good look for Tesla. So I could probably go back here, last 30, I'll just do 29. That's 29 trading days. So it goes back more than a month. But you can see, I mean, there's just a lot of down all day long. I'm not looking at many gap downs with recoveries. When I'm looking at this, I'm just seeing a lot of periods where we are just getting hammered during the day. If anything, we're getting some gap ups more recently. We're not able to sustain them to the upside. So I'm not sure Tesla has found a bottom yet. It looks to me like the stock is continuing to be sold off. Now, I'm going to say for right now, and we're in a range, pretty tight range, just above 250 down to about 218 or so. Beyond that, I mean, let's see which way we break. But if we can't get up to about 253, 254, and really start to see some volume coming in and actually trade up throughout the day, I would be cautious with Tesla until we get to what looks like a more definitive bottom. I don't think that's here yet. All right, that's all I got. I'm going to go ahead and wrap up. I do appreciate everybody, like I said earlier, having the patience so that we could finish the education week this week. I want to encourage everyone to take out a 30-day trial over at Earnings Beats if you're not already a member, because we got some great events that are going to be coming up. One of which is only for our annual members, and that's going to be it's like market vision, like I did at the beginning of the year, but it's an update going into quarter two. So I'm updating everything I went over, where I provide targets and everything. You're going to get all of that coming up on, I think it's the 30th, I believe. I'd have to go back and take a look. I think it's March 30th. Or no, 31st. It's the 31st. I think that's Monday. But yeah, timely, right before the second quarter. I'm going to, have another 10 days or so to see what's going on here after the Fed meeting. But if we don't see some improvement, you're going to want to have that forecast or that updated forecast. Because back at the beginning of the year, I called for a correction. I thought Q1 was going to be challenging. But honestly, I was looking for the market to have a pretty significant rebound after that. And we'll see. I'm hoping that that's still the case, but we'll talk about it a lot more on Monday, March 31st. Anyhow, come over and check our service out in the meantime, because if you do, and you can go over to Earnings Beats, and right here, start your no-cost trial. Click on that, and you can take a look at things we have to offer. And then, of course, start putting information in to set yourself up. You do have to give credit card information for this free 30-day trial, but you will not be charged until the end of the 30 days. And we'll remind you that you're coming up for a renewal and that you're going to be charged. So we don't want you to be charged if you don't like the service, but check it out, because if you do like the service, you're going to want to update and become an annual member before March 31st. So now's it. And by the way, if you sign up now for 30 days and you do become an annual member during the 30 days, your annual membership will start after the trial period ends. So it's not like you lose the rest of your trial period. So now's a great time to sign up. Check it out. Go look at all these, chart lists that we've gone over through, the free education week earlier this month, and then what I'm showing today. Certainly would appreciate you giving us a shot. And if it's not working for you, that's fine. No harm, no foul. It's completely up to you. We have a lot of really happy members, I can tell you that. All right. If you like the video, hit that like button, subscribe to our channel. We do a lot of things, live stream, a lot of shows and events and things. And so if you are subscribed to the channel and your notifications are on, anytime we start a live episode, you'll be notified on YouTube. So definitely check that out. And it'll help us with our algorithm. So even if you're not a paying member at Earnings Beats and you want to help out, click that like button and the subscribe button as well. So that's it for me. Again, hope you enjoyed this session going over a lot of our chart lists and how we organize things for our members. A lot of the research that we do, there's a lot that goes into our service, and hopefully you have a little bit better handle. Maybe those of you that are members, maybe this has helped you get a better handle of some of the things that we offer at Earnings Beat. So anyhow, have a great evening, everybody, and happy trading.